and dive straight into corporate conversations on the back of earnings. We've got the management of V2 Retail, Mr. Akash Agarwal, the whole-time director at V2 Retail, joining us on the show. Mr. Agarwal, hi, morning. Good to be speaking with you. And, of course, before we talk about your quarter 4 earnings, talk to us about your store count guidance, because I remember the last time we interacted in our long-format show, you did give me a guidance about 170 to 180 stores for FY27. And given that you have a history of always beating the guidance that you've given, how does it look for FY27 so far? 170 to 180 stores looking good, or are we looking at another upward revision?
Hi, good morning. Thank you for having me. So for FY26, our target was 100 new stores. We ended up opening 136 on the back of very strong performance, both from old and new stores. And this year, we've taken a target of opening at least 170 stores, and hopefully we can touch the number 200 if the performance continues.
So 200, so you've given me another number to look forward to. So Akash, I'm going to be watching out for that. But let's focus and talk about the quarter that you've seen. Now, despite strong revenue growth, your sales per square foot, that has declined in quarter 4. Is this primarily a result of rapid store additions and store maturity, or are you seeing any moderation in demand, if at all, playing out on the ground?
So our same-store sales growth was in fact 8.6% for the whole year. So if you look at only our old stores in isolation, the per square feet sale of those stores are above 1100 rupees per square feet. But because we opened 136 stores and they start at about 70% of throughput of old stores, the whole company's PSF comes down a little. But as these stores mature over the period of 3 to 4 years, you will see the sales per square feet at the company level rising.
Okay, and you did speak about your same-store sales growth that has normalized to high single digits. This is below the historic levels that we've seen, more than 20%. What would be a sustainable same-store sales growth number to expect over the next 2 to 3 years, as your base also now is scaling rapidly?
So because the base has increased from about 650 rupees to 1120 rupees, we target a 8 to 10% SSSG on that number. On account of a higher base.
Okay, 8 to 10%, that's what you're aiming for. And let's also talk about your working capital. Working capital days have increased sharply from 45 to 81. At what level are you expecting inventory and working capital to stabilize once the current expansion phase moderates?
So two things happened here. One, because of the war situation, we saw there could be disruptions in the supply chain. So we increased our safety stock in our warehouse. So we did receive goods well in advance, just to be sure that we were well stocked for the festive season. And also we had planned to open about 60 stores in the first quarter itself. So all the inventory pertaining to those stores were already received in the warehouse. And third, we did a lot of prepayments. So if you look at it, our credit days have come down by almost best paymasters to our vendor. So we give them a facility of discounting where they can get any of the due bills, get paid right away.
Okay, and given your guidance, you are targeting about 40 to 50% annual revenue growth over the next few years. What are the key levers that give you the confidence in achieving this, and how do you ensure that this rapid expansion that you're undergoing right now does not come at the cost of store productivity and margins or store economics? Give us some light over there.
So we only ever commit to the next 4 to 5 months of our growth, because from the day you finalize a store till the store opens, it's about a 3 to 5 month journey. So we do a business review every month. We don't want to compromise on any of the profitability metrics,
Sure.
any of the EBITDA metrics, any of the investor return metrics. So if we feel that the performance is strong and we are meeting our metrics benchmarks, then we continue on this path of aggressive growth. And the things that are driving this growth is, of course, better fashion product, better assortment, faster response to trends, improved inventory management, and a lot of digitalization and technology adoption.
Understood. So would it be fair to try and conclude that this 60% growth that you've seen for quarter 4 and roughly 63 for overall FY26, is it going to be sustainable, or can we expect an uptick over there? Even if not an uptick, can we expect this 60% number to be the base case now for your revenue growth going ahead?
So like you already mentioned, we like to understate and over-deliver. So
Sure.
we are guiding for a 50% growth, and hopefully we can beat it again this year.
Percent is the number that we're going to be working with. Also, talk to us about now that the summer is at its peak, across the country, with monsoons also now expected to approach soon. How have you seen summer sales shape up? What have the fashion trends been? And how is overall quarter 1 for you shaped up so far?
Quarter one was in line with the expectations and the targets that we'd set. There was a slight dip in the middle of May because of external factors. There were a lot of prices going up, but I think all of that is in short term. Long term, I think the whole year we will be able to do 8 to 10% SSSG and a 50% revenue growth.
Okay, these are numbers I'm going to remember for our next conversation, Akash. And lastly, let's talk about the sector. Value retail has been one of the strongest performing consumption segments over the last couple of years. Do you believe the runway for market share gains remains as large as it was 2 to 3 years ago while this was still an emerging space?
I think it depends on the execution and strength of each of the retailers. If you are able to increase the gap in the offering between the unorganized value fashion segment versus the organized segment in terms of product offering, in terms of the kind of fabrics, the colors, and international trends, then I think sky's the limit, and we can actually do better than how we've done in the last 3, 4 years.
Okay, sounds good. On that note, Akash, thanks so much for your time. Good to be speaking with you as always. Going to be watching out for that store count number as well as your revenue and triple SG growth. Thanks so much for your time today. Okay, viewers, on that note, it's time to slip into a very short break. More corporate conversations lined up on the other side. Stay tuned.